Hello and welcome to the weekly market update, where we review the action of the week and see what's setting up going into next week. If that's what you're into, stick around. All right, so what you're looking at here is United Healthcare Group, ticker symbol UNH, and it's been the talk of the town recently. Yeah, big stock, big Dow component, down almost 50%, or yeah, more than 50% in a month. And we're getting a nice little rebound today. Yeah, I think in not in the public account, but another account I had bought some shares and sold some naked puts in this name yesterday. And yeah, we're doing pretty well on it. So that's a pretty fun thing to do. Get involved into the name that's really popular and having it work out. We got some insider buying on this stock as well. Yeah, I don't know. I don't think it's going to bounce, a lot. For those of you who don't know, I've been an investor for over 10 years and a full-time swing trader for the last 5. In August of 2024, I welcomed my first child into the world. To build his financial foundation, I funded a $100,000 account for him, which I'm growing using a personalized 60-40 portfolio approach. This channel will document that journey. My goal is to create educational content so that one day my son can learn how I grew his account and apply it himself one day. To follow the portfolio's every move, check the link in the description below. I attach it to a website that tracks every trade. Drop your questions or thoughts in the comments. I'd love to hear from you guys along the way. Cheers. I'm kind of just using an analog of, kind of like gold. I can show you guys that chart too. When gold went up here, I had shorted it and just got that 1 day move and I got out because it's probably just gonna, once that big volume comes in, it kind of just goes sideways for a little while. So, it's just the same thing as gold, but inverse. Yeah, that's what we're going. But hey, under the surface this week, we're having a lot of monster moves. Okay, I was thinking the market was going to go down. I mean, that would be a reasonable thing to do when I show you guys the market monitor. Yeah, this rally is turning out to be a very, very strong rally. We're getting rid of distribution days, and we're back at one distribution day, which is a stall day. So very strong. Underneath the surface, we have like big moves, like this DeFi development company. They do Solana stuff. It's up 500% in a month. What was the other one? There was like some RGS or something, I think. No, it's not RGS. It's RGC. Yeah, RGC. Man, this thing is up 1,500% in a month. Just some massive moves. Yeah, I mean to end the week. I mean, a lot of nice moves today in some of the names that we hold in the portfolio. This BitDeer is doing well. What else? I was debating selling this this Moderna, but it seems to be bouncing off of this key level here. We're gonna watch it going into next week. I'm still kind of bullish on it, but yeah, I mean anything could really happen with this name. It's a very weak name. So that's something I'm watching this week. Tesla continues to do well. Tesla looks like it's going to test, 370. Because every time you have this kind of a move, we have a selling climax, we have a secondary test, we have a rally which overcomes the change of behavior rally, and then we kind of build out this base and it does a little backup action here. That's very bullish, and then it's like a springboard, just ready to go. Yeah, I don't know if you guys notice what I have with my charts is I have them colored, like sometimes the down days are colored red and sometimes the down days are colored gray. Basically, whenever they're colored gray, that means it's a down day, i.e. the close is less than the open, but it's above yesterday's close. I found that it does a really good job of just tracking up waves. So this entire consolidation, we never had a close below yesterday's low. So that's very bullish. Another thing that I'm watching out for, I mean, this is a very bullish stock, this Berg Warner. It's an auto parts stock, and I've been getting bullish on auto parts stocks because, or just mechanical parts in general, because I think people are going to start pricing that in, move to robotics, and you know all this hype about robotics. The only thing that comes to mind is parts. I think it's going to be massive. I think the parts business, because listen, if you have AI and what everybody's bullish about is AI, robots doing all the work, et cetera, et cetera, what that basically does is that creates uh, like cars or machines that are basically working 24 hours a day, right? Or extensively. Whenever that happens, these things break down a lot. So I think we're going to have more things that break down, which means that the repair business and the parts business is going to be huge. I mean, one thing that I always watch for is like this O'Reilly Automotive. I mean, look at this. This is like the most parabolic stock you've ever heard, that you've never heard of. It's just incredible. Like, or AutoZone. These are the most parabolic stocks that you never hear of, and they're just boring little auto parts stocks. So, and that's before robots are coming into play here. So I think that it's a massive opportunity. I'm still in Tesla, which is going to do the robot thing, because I guess you have to. But you know, I'm bullish on auto parts and I'm bullish on robot parts. There's a Japanese company that I'm in, but I wouldn't talk about it here. But yeah, there's just a lot of massive moves happening under the surface. That's like getting me really really excited. And when we go to the market monitor later, I'll show you guys what's going on. But anyways, so that's kind of like a stock update. Um, yeah, what I want to do in these videos is perhaps during the stock update, kind of teach you guys a little bit more about technical analysis and how you can read these price trends and how you can read these averages that I use. I think that would be beneficial for a lot of people. Um, but anyways, let's go. Let's start that on the S&P 500 and go from there. So yeah, I wrote down last week that my target for the pullback was around here. I mean, I still think we can make it there, but it's just very, very, very bullish at the moment. And so here, if I could just move this a little bit. So if we're looking at this rally, one thing that we can note is I'm using a yearly moving average for the volume down here. Okay, and now look at this. This day here on the S&P 500 had barely over a year, a yearly average amount for the volume, and the price had moved up 3.5% that day. Now look at every subsequent day. Okay, it's basically the same amount of volume as on that 3.5% day, but the market's not moving 3.5%. Okay, like today it's up 0.6. So obviously inside of these four candles, although we're moving higher, they are selling into this. Okay, um, I believe the composite operator, the smart money is selling into this rally because you could just see that there's just more, um, or same volume as this 3% day, and it's just not moving as much. That's something we look out for. It's called effort versus uh, um, result, right? So what's the result of the candle moving, and how much effort, aka volume, was used to push that price up. So yeah, just something to note. Some people think volume's dirty. Like a very prominent guy that I watch thinks volume's dirty because of all the high frequency trading bots. But you can all always even it out and average it out. I mean, I think it's still an important thing to look at. Um, yeah, because I mean, how else are you gonna understand the effort involved with pushing something around? But yeah, they don't want to sell. I mean, they don't want to push it down for sure. They're just letting people push it up. but they're setting limit orders in there, and so they're getting hit. But I still think, listen, it's just the same as you can make a bet whenever you crash first below the yearly moving average that it's going to test this thing. Like I thought it was going to test and it was going to pull back and go lower, but that didn't happen. That's okay. Um, I think anytime you break above, like similar here, um, we broke above here. We're gonna test this moving average again. Yeah, even here, you test the moving average here. So I mean, it's just guaranteed. Like I mean, if you go back, I'll probably have to do that sometime, but it's gonna test this moving average. And now, one thing I also wanted to show you guys is if we look up here. So right here, this is an indicator I'm really enjoying using nowadays. It's basically the distance from the moving average. And so what you can do is you can say, okay, right now we are 7.5% away from the quarterly moving average. So that means everybody on average over the last quarter who's bought in just every day is up 7.5%. Okay, if they bought in the last 63 days. Um, okay, so basically, if we go back in time and we look at this entire rally here, okay, even when it started, okay, over here, okay, what's the highest? Right here, 7.5%. Okay, so like right here, see how this red arrow right here? So this red arrow is getting very, very extended. Okay, we're 7.5% above the moving average. And during this entire trend, it was not that high. It tops out at around 5%. So to be 7.5%, it's extended. You don't buy stuff here. Um, you just wait for it to pull back. Even if it pulls back to about what is this? You know, like 4%. So maybe a 3% pullback. That's when you start getting busy. I mean, the big ones are if you just wait for it to go back to the moving average. That's a great buying opportunity. But yeah, I mean, if you just notice, even when the rally started here, it's like 5.5% here. So I can move it a little closer so you guys can see. Yeah, even in the bear market, okay, we were getting that was 9.5 away from this moving average. That's right there. So, we're extended. Even during the COVID rally, let's see here when we got that was 10% above when we got this big, and then we had that subsequent kind of 7% pullback there. So, we're due. Hard to time when it is, but if you just take a look at kind of the effort versus reward, because they'll let us know, and they're starting to do it. So it's any time now. We'll have to see. Probably sometime in May comes into place. But let's go see what the market monitor has to say, um, and yeah, we'll go from there. Or actually, let's go to the portfolio. Okay, so the portfolio is doing pretty good. This is still off, but we're up about like 5%, which is great. Yeah, so doing really well. What's doing it for us is like BitDeer is doing well, Tempest AI is doing well. Um, yeah, Tesla's doing well. Innodata, had some that Aurora's kind of pulling back here, but and the gold stocks are pulling back a little bit. We got some earnings coming up, and some dividends. So some of the Chinese stuff is going to be like I'm long Baidu in this account, some calls. So we'll have to see what happens there, and then this IQ. But yeah, everything's working out. Oh, Michael Burry bought into one of the stocks that we're in, this Estee Lauder. So that's good. Yeah, got hit a little bit this week, um, in some of the emerging market stuff. So like the Tigers and the Stone Coves and the Pags, that stuff kind of hit us. But we're still outperforming. If I go here and I go to growth, yeah, we're losing a little bit of the outperformance because of what's going on in emerging markets, but we're still doing pretty good. We're still outperforming the index and all that good stuff. So yeah, let's go to the market monitor and see what's going on there. The market monitor is a collection of data that I've taken over time. That combined with established strategies by William O'Neill, Richard Wyckoff, and Stan Weinstein, I could use it to peer into the market to see where we're at in the cycle and where we could be going. I'm going to use this data to cross-reference the averages. So if this data is above average or below average, that should tell us something about where we're going and where we've been. By knowing that, we could set an expectation, and if that expectation is met or not met, we can make decisions based on that. And that's why the market monitor is a crucial part of my investing process. And I hope you guys can get a lot out of this segment. And if you want to know how the market monitor works, I'll link a video in the description below. It explains everything. Cheers. So I'm still in the process of updating this, but bear with me. But yeah, I think uh, going forward, I'll have some cool stuff to show you guys and or just to present. So hey, I'm getting pretty bullish on this market longer term. If we test that quarterly moving average, that would be a big, big buy opportunity again. Yeah, we only have one distribution day. So now we are on day 19 of this follow through day rally with 5 follow through days in this rally and only now one distribution day. Um, yeah, on average, these rallies last 13 days. So we're already above average. And on average, we, in 19 days, we're only up 5.5% in those 19 days. And I think if I look here, we are now currently up 15% in those 19 days. So we are 3x the average in, and we're only a couple days above average. So very strong, very strong. And we're seeing 16% of stocks in stage one. So that's long term, that's bullish. Uh, and then these stocks in stage three are going down. So long term, it's looking like what I was saying earlier. I mean, we never got below on this New York long term breadth indicator, and we're only at 70 now. It's getting extended. 70 is extended. You want to be buying when it's in 20s, right? So we're back over here. So it's all the data is pointing to a long-term uptrend. We had the anxiety index at 30K. Now it's finally starting to drop. It had a big drop today, down to 25,000. So yeah, the opportunity is leading, but I still think we're going to pull back next week. But the market monitor is just very, very bullish. Yeah, the put call ratio is at 0.58, so we're getting a little stretched here. A lot of stocks are going 20% in 5 days. It's just been a monster market after the decline. Because I mean, I think that that account, public account was almost down like 15% at one point, and now we're up. So that's a 20% move. In the market's 15%. So market monitor looks good. Yeah, I mean, going into next week, I mean, I have this scan for stocks that are in stage 2 uptrends, but a lot of these stocks are just making monster moves. This ACHR, Unity looks very nice. This is like a top stock. This thing just looks great. Hertz Global looks good. Okta, if this thing can pull back, that thing looks good. Tencent Music looks good. What else? This Hesai, yeah, this is a robotics, or yeah, I think I'd have to look it up, but I think it's robotics. Uber, I mean, all of these things, if they pull back, CrowdStrike looks like it's setting up. These are all extended setups, but even Coupang, this is a nice base in this stock. And it's finally going. We've been watching this thing for a long time. Yeah, what else? EQT is a good one. Next Tracker, this is a solar stock. Very powerful move there. If this thing can pull back to the quarterly moving average, we'll watch it over the next like quarter or two. This asset entities thing, this is another pump stock. This is one that could go 1,500%. Kind of has that look of like the RGCs. When they do the initial move, it looks kind of crazy, right? And then it comes down and it sits right here. Yeah, and then it goes nowhere, and then it boom, like that. So this ASST, if this thing can kind of just go sideways for a couple days over here, that's looking pretty good. And that's it, in my watch list there. All right, guys. Well, if you enjoyed the content, feel free to leave a comment. I really appreciate anybody who comments. Like, it's super awesome. And yeah, feel free to like and subscribe, and I'll see you guys on the next video. Cheers. Have a good weekend.